So the fact that you and I are doing this interview, this podcast today for YouTube and Spotify seems to indicate that we share the view that we have a responsibility as public intellectuals as well. Not everyone in the discipline of economics would agree. There are people who say we should instead be focused on our scientific work and let the journalists deal with the dissemination. I would disagree.
Welcome, everyone. My name is Maja, and I'm a professor of economics here at the University of Zurich. Today, I have the pleasure and the honor of hosting Professor Barry Eichengreen, who's a renowned economic historian and a professor at the University of Berkeley from the United States. Welcome to Switzerland, Professor Eichengreen.
Thank you, Maja.
So, I was hoping we would start by hearing a little bit about your intellectual journey. So how did you decide to become an economic historian?
Well, I knew from an early age that I was interested in history and politics and economics, but history is complicated and confusing. Many things happen. And I found that economic theory provided a framework that I could use to organize the history. So I continued to be interested in political history, cultural history, other kinds of history, but I fell into being an economic historian because there was that unifying analytical framework, a portfolio of models and ways of structuring the world that helped me make sense of history. That would be one answer. Another answer would be in my final year of college undergraduate studies. I had an inspiring professor of economic history, and she led me down that road.
And did economic history meet your expectations in terms of being able to provide this sort of rigorous and uniform way for learning about history?
Well, broadly defined, yes. I continue to think in terms of economic concepts and in terms of the formal models that I have worked with in the past as my intellectual life cycle proceeds. I've been at this for a while now. I find myself leaning on those models a bit less and looking more at narrative history, literary modes of expression, and so forth. So that wasn't something I felt entirely comfortable doing when I was younger, but maybe I've grown into it.
Interesting. So what type of questions are you now looking at through this different lens?
My forthcoming book, shameless plug, it's called Money Beyond Borders, From Croesus to Crypto, where Croesus was the Lydian king who invented coin, money, modern money, if you will, all the way up through crypto, looks at the role of international currencies in history, their rise and fall, all the way back to the ancient Greeks and Romans and up to cryptocurrencies, stablecoins, central bank digital currencies. So that project has excited me because to do the Greek and Roman history, I had to read the literature of archaeology, I had to read the literature of numismatics, all of which was new to me. So the excitement is in learning new things in order to be able to write on new things. So the book is forthcoming through Princeton University Press next March.
Congratulations.
Thank you.
So, relating a bit to this discussion, so I know you worked extensively on the Great Depression and especially on the kind of monetary aspects of that. And I recently came across a quote, and again, I don't know if this is a real quote or not, but it's a quote that is in the internet, and and it's a quote by Keynes, who, according to this quote, when asked at the beginning of the Great Depression if something like this ever happened before, he said, yes, it was called the Dark Ages, and it lasted for 400 years. And I was sort of reflecting on that quote, and I was wondering what you think about it. So do you think that this was a misdiagnosis, or that, this is something that could have lasted for 400 years, but we just somehow ended up being lucky, and it having lasted for only a decade?
When you started the question, I thought you were going to go to a different quote from Ben Bernanke about the Great Depression being the holy grail of macroeconomics. That if we can, as business cycle theorists, if we can understand the Great Depression, we can understand any and all business cycles. The Dark Ages was the collapse of institutions and society, not only the collapse of markets. So I think Keynes may have been stretching the point a bit. In terms of the Great Depression, there is a question of whether markets are self-correcting, are self-equilibrating. If policymakers hadn't done anything, would the economy have begun to recover of its own volition? And how long would it have taken for recovery to set in? So when I think of Keynes, I think of someone who challenged the notion that the self-equilibrating forces of the market are strong, that the depression would have been even deeper and would have lasted for a considerable period of time had there been no policy response to it. As it happened, full employment in the United States was only restored during World War II, after 1941. So this was not the Dark Ages, perhaps, but by our modern standards, it was not only a deep, but a very long-lasting depression.
And how should I think about the role of World War II in taking us out of the Depression? I mean, would it have lasted longer if it weren't for the war, do you think?
Well, recovery was underway in the United States, in particular, from 1933, when the dollar was devalued and some modest steps in the direction of fiscal stimulus were taken. There was a veterans bonus, a bonus paid finally to World War I veterans in 1935. So there were forms of monetary and fiscal stimulus. They were relatively modest, and there were some other measures taken along the lines of what we would now call industrial policy that many economic historians argue were counterproductive and that may have slowed the return to full employment. So unemployment can be measured in various ways. Even today we have in the United States U4, U5, U6 different statistical measures of unemployment. The best measure we have for 1941 would put unemployment still in the range of 14%. So that's a big improvement from the high of 25% unemployment circa 1932-33. But it took the outbreak of World War I, which entailed the withdrawal of some labor supply as men were drafted and served in the armed forces, and a whole lot of demand stimulus all at once as the economy was converted to a wartime footing. So the combination of those two shocks, one on the supply side, one on the demand side, restored full employment finally, very quickly. My counterfactual would be it could have been accomplished sooner, more effectively, had the US abandoned the gold standard earlier, lowered interest rates, expanded the money supply, and had modern theories of countercyclical fiscal policy been known at the time, so they could have been implemented at the time.
But so how do you think about the role of the fiscal expansion, right? So I mean, if the key issue was a contraction in the money supply, then how does this kind of fiscal stimulus, including World War II, but also the New Deal policies and so on, how does that help restore full employment or address the key issue if the key issue is the money supply?
So I should start with the observation that monetary policy was much more important than fiscal policy for recovery in the 1930s, my longtime Berkeley colleague, Christina Romer, has a nice article in the Journal of Economic History called What Ended the Great Depression that shows, I think, quite convincingly that monetary policy didn't end the Great Depression exactly, but it was much more important for the recovery that followed than was fiscal policy. The fiscal stimulus was limited in magnitude. It was limited mainly to the veterans bonus that I described to you before. New Deal programs did not translate into significantly larger budget deficits and large amounts of fiscal stimulus. And then there was a turn back toward balanced budgets prematurely. Already in 1936-37, FDR, the author of many of these measures, was something of a budgetary hawk. He believed that in the analogy between the household budget and the government budget, that the government should live within its means. So there was some fiscal contraction, and as it happened, monetary contraction as well. That led to a double-dip recession in 1937-38. One of the reasons full employment was not restored more quickly was that double dip, which with hindsight, we can say could have been avoided.
So do you feel now that, so going back to the quote that you thought I was going to talk about, do you feel that you now understand the Great Depression, that it's something that you understand what caused it, what ended it, what prolonged it, and there's no more reason to kind of question, there's no more unanswered questions with regards to that?
There continues to be an interesting literature on the Great Depression where people studying it are turning to microdata in much the manner that economists who looked at aggregates in the past are able to look at much more fine-grained big data now. So where 30 years ago we would study financial crises by having a 0-1 variable, either a country is in one or out of one, and people like Ben Bernanke and Harold James would assemble cross-country databases, who is in a banking and financial crisis this year, who is out of one. Now, in contrast, people in different countries are gathering individual bank-level data, or even better, data on the connections between banks and firms to trace the transmission of negative monetary and financial shocks. So there's more to do. People are doing it, and I think more to learn. I do believe that we understand now better the broad outlines of what caused the Great Depression. So that's not to say that we can pinpoint exactly why things happened when they happened. There is human agency involved. There are stochastic elements. Markets react to what newspaper editors choose to put in the headlines on a given day. But in terms of the broad underlying factors, I think we understand both the run-up to the Depression, why the global economy turned, why it turned down in 1928-29, and how the recovery unfolded. So how long an answer to this question do you want at this point? I could I lecture on this to my students for like 2 hours. I could lecture here for 5 minutes if you want.
Well, I mean, I was just curious about your impression of whether it's still this kind of dark mystery that we don't know how to solve, or that we don't know what happened and why it happened and how to prevent it from happening again, or whether it's something that's already resolved. And it sounds like you kind of think it's in the resolved category, which is good news.
Well, I like to think that my interpretation of the Great Depression is definitive, right? We all like to think that our story is convincing and widely accepted, at least by oneself. So I do feel comfortable teaching the Great Depression and providing a particular analysis of it. So when I came in analyses of the Great Depression were heavily focused on the United States, where my view is that it was a global phenomenon. Analyses were closed economy analyses of the US, where I think the international transmission of shocks was critically important. Back then, there were a small number of people. Charles Kindleberger, the MIT economist and economic historian, would be an example, a small number of people who understood this global dimension. A University of Manchester, Princeton University economist, Arthur Lewis, understood this global dimension, but few others. And the influential treatise of the time, Friedman and Schwartz's Monetary History of the United States, which was kind of the leading intellectual statement of what caused the Great Depression, was very much focused on the US. So I think there has been intellectual progress in terms of internationalizing the discussion, understanding that there was a global depression, using comparative evidence across countries in a more systematic way, and drawing in scholars from other parts of the world. So again, when I came in, work on the Great Depression was largely done by Americans based in the United States. And now much of the most exciting work is being done by hordes of people in scores of other countries. That's progress.
Yeah, definitely. Well, and so maybe you convinced me that I don't need to worry about the Great Depression, and that even that Keynes was wrong, thinking that this could be something like the fall of the Roman Empire that could put us into an entirely different regime that lasts for, I don't know why he says 400 years, by the way, and not 1,000, but anyway. Should I still worry about that, right? So, I mean, kind of putting ourselves in Keynes' shoes at the start of the Great Depression. Maybe he was wrong that this is what was going on. But do you have a sense if something like that could be going on? I mean, if we could ever find ourselves in a situation where everything around us collapses and we enter into another kind of dark ages?
That's a very apocalyptic question. So I think, Keynes was concerned that the crisis in the economy would spill over into a crisis in the financial system, in the political system, as it did in the case of Germany, for example. And not only would economic and financial institutions collapse, but political institutions would collapse. The political system would stop functioning. There would be a descent into authoritarianism. And if you'd asked me 5 years ago, is such a thing conceivable in our day and age, I would have said absolutely not. Political institutions in countries like the United States are robust. We have rule of law and checks and balances and a well-defined division of powers and respect for the Congress and the courts and a robust civil society. If I'd said all of that 5 years ago, I'm not at all confident about that today or going forward. So if there, continues to be the kind of political dysfunction that we are seeing in the United States, that could lead to economic mismanagement because the Federal Reserve is no longer able to act as a lender and liquidity provider of last resort, having been packed with board members who either don't know what they're doing or answer to a president who doesn't know what he's doing. Then political problems can feed economic problems that in turn can worsen the political problems. I don't know whether I would liken that to the Dark Ages or the fall of the Roman Empire, but I think there are very serious, if I can call them social problems, that we are facing in the United States and various countries in other parts of the world, including in parts of Europe. are facing as well.
It's interesting that you kind of mentioned 5 years ago that you would say that we have no chance of anything like that, because so I don't think about these things often, but my height of my fear about this question was 5 years ago during the COVID crisis, right? And it could be, I just had my second child, and I remember kind of thinking, like, what kind of world was she born into? Are we going to now deteriorate into some kind of feudal system with autarky where we only I really kind of had this feeling that maybe we are entering this kind of recession that's not just a recession, but something that might last forever. And I kind of think that often when we, at starts of recessions, we sort of have this intergenerational trauma of the dark ages that sort of resurfaces. So COVID turned out to be fine, right? But you're saying that now you feel more worried about the future than you did during COVID.
So COVID was a terrible thing. Many people died. It was it disrupted the economy, and as importantly, disrupted our lives as well. But I think governments, by and large, responded to it in a constructive way. They responded with health-related initiatives. We got vaccines, and we got fiscal stimulus and monetary stimulus, maybe a little bit too much, but plenty of it in response to the crisis. So the economy did not collapse, financial markets did not collapse, and we came out the other side. We now have the problem that the COVID experience seems to have undermined trust in government, undermined trust in politicians, undermined trust in the science and scientists. So I have a couple of papers on that, actually looking at past epidemics and then looking at Gallup World Poll data to ask if you've lived through a epidemic during your impressionable years between the ages of 18 and 25, when your political views are firmly formed. Are you less trusting of politicians and government? And the answer is clearly yes. We linked up that database on the history of epidemics with a welcome trust survey in many countries of trust in science and scientists. And you can see clearly that living through an epidemic during your impressionable years leads you to trust scientists, especially those who work for the private sector, less than otherwise. So I think there is something there. But when I said 5 years, I was not thinking about COVID. 5 years ago, Trump was defeated by Biden. And there was reason to think that the aberration of the first Trump term, where Trump was protectionist and he was saying extreme things about how much power the government and the executive branch in particular should exercise over the economy and society. 5 years ago, there was reason to believe that was all over. Well, it's back.
And so what now? What do you think? Do you think now we might enter a very prolonged kind of, I don't know if recession, but do you think this will have a permanent effect on things, or do you think that in 4 years we'll be done and kind of back on track?
So people often ask me that general question in the specific context of the impact on the dollar and whether its safe haven role, its role as a global safe haven is intact. And my belief increasingly is that changes in how people and governments around the world view the dollar and the United States has changed permanently. And this is the damage that has been done specifically to the dollar's safe haven status cannot be undone completely going forward, as central banks and governments have begun to look around to alternatives to the dollar so they don't put all their eggs in one financial and geopolitical basket, now that they have begun looking around, are beginning to find alternatives, and they will keep looking around. And I think that point about the dollar probably applies more broadly. I like to think that I'm an optimist, but I do worry that some of the damage that has been done to the integrity of U.S. institutions, to the separation of powers, to the role of the Congress as a check on the executive branch, and potentially on the roles of institutions like the Supreme Court and the Federal Reserve. I worry that some of the damage that we are beginning to see will be difficult to undo.
So this is damage to the United States. But do you think for the rest of the world there are good alternatives to the dollar? Like, I might suggest the franc.
I do not think that there are good alternatives to the dollar at the moment. That leads me to fear that if there was more financial chaos coming from the United States and more threats to other countries coming from the Trump administration, leading to flight away from the dollar, the euro, the Swiss franc, the Chinese renminbi, none of those have a sufficiently large footprint, if you will. None of them are capable of replacing the dollar as a global currency. So I worry about a 1930s style scenario. You can tell already everything reminds me of the 1930s, where there isn't enough global liquidity to support the currently existing levels of cross-border trade and finance. That's what happened in the 30s, flight from the dollar, contraction of global trade and finance. Over time, I think efforts will continue to enhance the euro's global role so it can step up if the dollar steps down, and that will require completing capital markets union. It will require repairing the credit of sovereigns that don't have AAA credit ratings. It will require more of what Europeans call a fiscal capacity, and what we in the US would call fiscal federalism or a euro area treasury. China will have to continue to develop and open up its financial markets. When I go to China, I was there last month, as it happens, and I gave a talk on this subject. Can the renminbi be a leading international and reserve currency, they ask. One answer I give is that every leading international and reserve currency in history has been the currency of a political democracy or republic. So I gave you an argument before about how the strength of checks and balances and division of powers is important for the dollar's global status. China is an autocracy with no checks effectively on the decisions of President Xi. Can the renminbi become a true global currency under those circumstances? Will the Swiss National Bank and other central banks around the world feel comfortable about parking all their reserves in Shanghai under those political conditions? My argument is not likely. So the renminbi is not in a position, because of China's domestic politics, as well as because of the development of its financial markets, to step up and have its currency replace the dollar. Not now, maybe over time.
But the fact that, up until now, the global currency has been the currency of a Western democracy, doesn't necessarily mean that it will have to be the case in the future, right? I mean, so why couldn't it be China, even without reforming its institutions? Well,
so international currency status depends on, I guess, the recipe that my co-authors and I offered in a book in 2018 called How Global Currencies Work. The ingredients are size, stability, and liquidity. It has to be the currency of a large country. China qualifies. Has to be the currency of a stable country with a stable exchange rate and stable financial markets. China basically qualifies. And it has to be a liquid currency that trades in big financial markets that are open to the rest of the world. And China is moving gradually in that direction. It still has capital controls, so it's not there yet. But after we wrote that book in 2018, I began to think about two other prerequisites for global currency status. One is those domestic political conditions that I was describing. It has to be a country where there is rule of law, division of powers, political as well as economic stability. And I'm not sure that China's politics are attractive to make it an attractive repository for the reserves of other countries, because it's fully within the power of the Politburo to change the rules of the financial game overnight, change the rules under which you can get a hold of your renminbi reserves. So people, other countries, worry about weaponization of the dollar and about how what Western countries did in terms of freezing and now perhaps garnishing Russia's reserves might affect their willingness to hold their reserves in London, New York, wherever. People worry about the ability of the Chinese authorities to arbitrarily change the rules of the game. And the second political dimension I began to worry about subsequently is geopolitics, that governments and central banks hold and use the currencies of their alliance partners. Their alliance partners they do it as a show of good faith toward their alliance partners, and their alliance partners are seen as reliable stewards of their reserves. China doesn't have a lot of close allies, if you will. There are lots of countries that participate in its Belt and Road program. Not a lot of countries with which it has the equivalent of a NATO partnership. So I don't know that the geopolitical conditions for the renminbi to become a leading global currency are in place.
What about currencies that aren't attached to a state, like cryptocurrencies or gold?
Well, we've seen central banks seeking to trim their dollar holdings or adding to their reserves, accumulating gold. Gold is attractive because it's kind of a traditional thing for central banks to hold, and it makes them look prudent when they hold it. It's safe from garnishment if you warehouse it at home, like Switzerland does and like Russia now does. When Russia was about to annex Crimea back in 2014, it basically brought all of its gold home and warehoused it vaulted it in St. Petersburg and Moscow. But once you do that, it's sterile. It can't be used in financial transactions. It can't be posted as collateral. It's hard to use in payments. You have to hire a jetliner to load it and transport it to another country. Plain vanilla cryptos like Bitcoin are too volatile to be attractive to conservative central bankers. Stable coins are yet to be proven, if you will. It's not clear that they will be stable in the long run. It's not clear that they will be attractive for payments. It takes the average person 10 minutes to take their Swiss franc on-ramp to a Swiss franc stablecoin, move that stablecoin onto an exchange where you can down-ramp to $1. That's a complicated transaction. I think central bank digital currencies are coming in the longer run, but making them interoperable across borders and therefore making them attractive as global currencies, attractive as reserves for central banks and attractive in payments. We know how to do that technologically. It can be done via blockchain, but who's going to run the blockchain? Who's going to regulate it? Who's going to agree on the governance? There are political obstacles to achieving that.
But do you think there's a role for something like that? So for an international currency that's not attached to any particular state, maybe run by the UN or, I don't know.
Yeah, we could call it special drawing rights. Keynes called it Bancor when he had it in mind during the Bretton Woods negotiations. I think we've learned that governments are reluctant to cede control, delegate authority over creating international liquidity to multilateral organizations or others. In the last 2 or 3 years, we've seen lots of talk about a BRICS basket currency or a common single currency for the BRICS countries. That predictably went nowhere because it would be infinitely more difficult, an order of magnitude more difficult than the euro. The BRICS are such a heterogeneous collection of countries. So I think the optimum currency area preconditions are not in place for a BRICS currency. And politically as well, the BRICS range from China on the one hand to Indonesia and Brazil on the other, Russia and to Brazil on the other hand. So the political conditions are not in place as well. So I think we will continue to be in a world of national currencies, the euro area being the exception that proves the rule because of Europe's distinctive history of 3 major wars in a century and the lessons that European leaders grew from that. But by and large, we're going to have to try to manage a global economy with national as opposed to global currencies. And for the moment, that means mainly the dollar. We therefore have to hope that the stewards of the dollar, the Federal Reserve, the US Treasury, the United States of America, know that, as one of my colleagues has put it, with exorbitant privilege comes exorbitant responsibility.
And do you get the sense that so far they've been meeting that responsibility?
No.
No.
You know, most recently, the Trump administration has said they want the dollar to remain the leading global currency. But at the same time, they want the dollar to be significantly weaker on the foreign exchange market. So you might ask, how do those two things go together? And the answer is they do not. We are trained as PhD economists to look for the underlying model that is informing the actions of decision makers. And I think in the present instance, that might be a mistake, that there is no coherent underlying model.
So what would you recommend in terms of actionable things that maybe, or some initiatives that can be done outside of the United States, maybe?
Well, number one, the global economy, because it runs on dollars, relies on dollar swap lines, the dollar liquidity that the Federal Reserve provides to half a dozen and more central banks around, important central banks around the world. There is the danger that the Fed may no longer be able or willing to provide that dollar liquidity in times of need. So other central banks need to figure out ways to provide it to one another. They have dollar reserves. They have limited agreements to provide swap lines with one another. I think they should step up those efforts. The IMF needs to make contingency plans for such a scenario. Does it have enough liquidity, enough financial firepower in reserve to help? And beyond that, I think central banks and governments should accelerate their efforts to enhance the international role of their own currencies, the things we talked about before, the euro area completing capital markets union, strengthening its finances, China developing its financial markets and trying to open up, etc.
And so going back to Switzerland. So Switzerland is very small, but also very stable and quite good with finance. And so what do you think Switzerland can offer as an alternative? Or, I mean, why do you so quickly dismiss that Switzerland might be an alternative?
So I dismiss Switzerland only because of its small size. Relatively small size tends to be good for governance. The political scientist Peter Katzenstein has written a series of books, including one on Switzerland, about how small economies and polities are able to develop institutions and traditions of effective governance. One of the problems we have in the United States is it's such a big, diverse, messy country where, blue states and red states cannot agree on anything. In terms of money and finance, international finance, I have another ongoing project with a couple of co-authors on what we call non-traditional reserve currencies. Not the dollar, not the euro, not the pound sterling, not the Japanese yen, which have traditionally been the big four. The dollar's share of allocated or identified global foreign exchange reserves has declined over the last quarter century from a bit more than 70% of the global total to now a bit less than 60% of the global total. Who has benefited from that? A quarter of the gains have been the Chinese renminbi, but the other 3/4 have been non-traditional reserve currencies, and those are the currencies of South Korea, Australia, New Zealand, Canada, Singapore, Norway, Sweden, but also Switzerland. But of the increase in non-traditional reserve currency share, Switzerland the Swiss franc accounts for 1%. So it's simply not a big enough player in this financial world to change the global outlook. Switzerland, benefits from open financial markets and monetary stability. It has a big banking system and does a lot of international banking as a corollary of those previous facts, but it can't solve global liquidity problems on its own.
Since you mentioned governance and the size of the United States being too large for some things, do you think that there's potentially more of a role for the states or for the regional feds to kind of maybe become more independent?
There's not going to be a role for the regional feds to become more independent because the arrow of history has been pointing in the other direction. More power for the Federal Reserve Board and the Federal Open Market Committee. The regional reserve banks, regional reserve bank presidents, and the staffs that inform their views are important because we have a diversity of views on the FOMC, which is important. When you get a single party line, you can get into trouble. So recently we've seen a number of dissents when the FOMC votes on whether to cut interest rates or not cut interest rates. I view that as a healthy thing, diversity of views and some members challenging others. So in terms of monetary policy, I don't think so. In terms of financial regulation, the principle of the matter is that the individual reserve banks know best what's happening in their district. Doesn't always work out well. When Silicon Valley Bank failed, it was ostensibly overseen by the San Francisco Fed and its banking and financial regulation division. So I think the principle is sound. The practice doesn't always work out perfectly. But you introduced the question by asking, is there a bigger role for the states? And I hope so. So I live in a state, California, with a climate policy in a period when the federal government no longer has a climate policy. I live in a state where the state law enforcement and local law enforcement workers are tasked with being sure that the federal immigration authorities, Homeland Security and ICE, follow strictly legal means when they go about their business. But all of this is being contested as we speak. California has stringent mileage standards for motor vehicles. And because we're such a big state, our standards get exported to the motor vehicles being sold in other states. The car manufacturers can only make one kind of car, so they make it to our higher standard. And the federal government is challenging whether California can have a different, stricter mileage standard or not. So I hope there's a role for the states. Time will tell whether it endures.
Okay, so I wanted to go back to something that you mentioned earlier about narrative approaches to history. And when I asked you whether, where you think that they're useful, you kind of mentioned a time where we don't have a lot of data. Do you think that in the future or in the present, where we do have a lot of data, there is still an important role for these other types of historical studies, the narrative approach?
I do. I'm not sure whether I want to defend a strong distinction between narrative approaches and formal mathematical modeling approaches. Because if you ask economic theorists what a model is, it's a way of communicating a set of ideas. Not typically a set of ideas that unfolds over time with historical dynamics. So I think narratives might be easier for communicating those kind of phenomena. Part of the issue is what kind of audience you are speaking to. So people who do formal modeling are tending to speak primarily to their professional colleagues, exclusively to their professional colleagues, where increasingly when I write, I like to write not only technical articles for my professional colleagues, but books that aspire at least to speak to a broader audience. And you have to have a narrative, in particular a narrative that involves people and personalities and times and places in order to communicate with that broader audience. It's controversial within the academy whether we have roles not only as scientists, but as public intellectuals. So the fact that you and I are doing this interview, this podcast today for YouTube and Spotify seems to indicate that we share the view that we have a responsibility as public intellectuals as well. Not everyone in the discipline of economics would agree. There are people who say we should instead be focused on our scientific work and let the journalists deal with the dissemination. I would disagree.
I would as well. But in terms of so obviously for communication, narrative is useful, but in terms of kind of the research end of it, so when you're just trying to make sense of something yourself, do you find that you start from a narrative and then look for the data or the model to back it up, or do you kind of start from the data and then try and see what narrative fits that, or how do you kind of go back and forth?
It's a wonderful question, and we get it from graduate students all the time. I have finished my coursework and my qualifying exams. Now I need a PhD dissertation. Do I start by looking for an idea and then investigate whether there are data with which I can develop that idea? Or do I look for an interesting data set, and once I've found one, figure out what I can do with it, figure out what idea can be developed using that data set. And the answer inevitably is it's partly a random process. Who knows whether you're going to come up with the idea or the data first, but fundamentally it's an interactive process where you have a germ of an idea, and then you have a lead to some possible data, and that leads you to develop the idea further. So I don't think it's either or, it's both at the same time.
So why do you think that people in our profession oppose this type of more public engagement and general public-facing work? I mean, what type of opposition have you encountered from your colleagues? And
well, you will certainly know that there is pressure in the profession to publish in top 5 journals. When I came into the field, when I was an assistant professor and a young full professor, that pressure didn't yet exist. If you publish good work in decent journals, one's colleagues would read the work and make their own judgment about how valuable and important it was. Now, increasingly, the editors of the top 5 journals are gatekeepers who decide what gets in, and that decides who gets tenure to a first approximation. So I think that's an unfortunate turn of affairs. We, as scholars and professors, should have the confidence to judge on our own the quality of the work and make the case to our deans, as opposed to counting top 5 publications. But a corollary of this system is that scholars, especially younger ones, are focused on doing highly technical work that gets published in top 5 journals, and to be writing newspaper columns is taken as evidence that people are insufficiently focused on that goal.
interesting. I mean, I did notice that this type of kind of outward-facing and public-facing work is more usually done by tenured faculty, but I always assumed that this was because, it required kind of a more experience and a reputation and a broader perspective, which you wouldn't necessarily have as a junior faculty member.
No, I think it is more publish or perish, and publish in a top 5 journal or perish. There are many younger scholars, new assistant professors that I've seen and that I know, who have the entire skill set to write to something for a broad audience from the get-go.
And they chose not to. They choose to focus on the more technical.
Yeah, there's lots of pressure not to.
And so who is filling that gap?
Well, older scholars like me are doing our best to fill that gap. There are important public initiatives as well. I think of Project Syndicate as one, which provides a platform, vehicle for dissemination of these kind of opinion pieces by economists and now others. The Center for Economic Policy Research, now in Paris, provides a platform for Vox EU, which again I think is important for disseminating important economic research, but also other research to the broader public.
Is there anything you'd like to say or talk about in conclusion?
No, I think this has been a interesting hour, starting with very specific research questions like causes and consequences of the Great Depression, and ending with questions about methodology and the incentives that we face as scholars and academicians. So I think that covers it.
Great. Well, thank you very much. This was really interesting, and I'm glad that we managed to cover so much ground. Thank you so much. Professor Eichengreen.
It was fun.